Good day, everyone. We are Group 3, and today we will be representing about Centene Corporation, one of the largest healthcare enterprises in the United States. This reports the company overview, financial performance, recent news on our investment assessment. Centene Corporation was founded in 1984 and headquartered in St. Louis, Missouri. It is best known as one of the leading providers of managed care services, especially for Medicaid populations. The company focuses on improving access to healthcare, particularly for underserved communities. Over the years, Centene has grown into a major player in the healthcare industry because of its wide network and strong emphasis on affordability and accessibility. Centene operates across several major business segments. First, Medicaid, which provides coverage for low-income individuals. Second, Medicare, which serves elderly and disabled citizens. Third, the marketplace, which offers insurance plans to people without employer-based coverage. And lastly, integrated care, which provides a more holistic set of services combining behavioral, physical, and social health needs. This slide shows the Centene Board of Directors for 2025. The board is responsible for overseeing company strategy, ensuring regulatory compliance, and guiding long-term decision-making. Their leadership shapes how the company responds to industry's challenges and financial risk. For financial performance, Centene reported approximately $154 billion in total revenue in 2024. Net income was around $2 billion. Then, company has a total asset about 83.5 billion and the total liabilities of around 60 billion. They also maintain over $35 billion in cash, investments, and restricted deposits, which shows strong liquidity. However, one concern is their Medicaid loss ratio, which increased to around 93% in Q2 2025, meaning medical costs are rising faster than expected. In July 2025, Centene withdrew its financial guidance due to higher medical costs. This caused a sharp decline in its stock price, dropping more than 30% in one day, and over 40% earlier that month. Analysts downgraded the stock because of rising uncertainties in revenue and cost management. However, a positive development came in September 2025 when the company reaffirmed its profit forecast, causing shares to rise by more than 11%. Overall, investor sentiment remained mixed due to fluctuating performance. This slide shows the comparison between Centene 2023 and 2024 income statements. The main point here is that while revenue remains strong, increased medical costs affected profitability. The company continues generating large revenue, but controlling expenses remain a challenge. Cash flow from operation dropped significantly from 8.05 billion in 2023 to only 154 million in 2024. This was mainly due to higher medical claim and the timing of premium collections. Investing cash flow was stable, reflecting ongoing investments in technology and healthcare infrastructure. Financing activities shows more cash used for debt repayment and share repurchases. Overall, despite the drop in operating cash flow, Centene still maintained more than $35 billion in liquidity. Operating cash flow dropped sharply from 8.05 billion in 2023 to 154 million in 2024 due to higher medical claims and delayed premium collections. Investing cash flow remains relatively stable as the company continued investing in its infrastructure and health services offerings. Financing cash flow showed increased outflow in 2024, driven by debt repayment and share buybacks. Despite the drops in operating cash flow, Centene maintained strong liquidity with over $35 billion in cash, investments, and restricted deposit at the year end. Here we summarize key financial ratios. Liquidity remains stable with a quick ratio of 1.0. Efficiency improved as shown by higher asset turnover. Leverage decreased, meaning the company relies less on debt. Interest coverage remained healthy at 3 to 4 times. Profitability improved slightly with a rise of ROA. And lastly, the earning yield increased significantly, making the stock more attractive from a valuation perspective. For 2024, Centene's revenue grew to $145.5 billion. Their health benefits ratio rose to 88.3%, meaning medical costs increased. By year end, the company held $35.5 billion in cash and investments, showing strong liquidity. Overall, revenue growth came from marketplace expansion and Medicaid rate increases, while the higher HBR signals pressure on margins. Centene has a strong ESG initiatives, especially in environmental sustainability and social support. This includes telehealth effort to reduce emissions, recycling programs, and community-based health program focusing on food, housing, and healthcare access. However, for governance, the company still faces challenges, especially after legal settlements totaling over $1 billion. This suggests that while ESG efforts are strong, governance systems still need improvement for overall credibility. To conclude, Centene is a strong and dominant player in the managed care industry. For the short term, it is considered a risky investment due to volatility, rising medical costs, and a withdrawn financial outlook. However, for the long term, the company may be undervalued if management successfully control expenses and stabilize their margins. Our recommendation is a hold or cautious buy, suitable for investors with high risk tolerance. Thank you for your attention. In summary, Centene demonstrates strong market presence, consistent revenue growth, and robust liquidity. While short-term risks exist, long-term potential remains promising if the company effectively manages cost and governance challenges. We hope this report provided a clear understanding of Centene's current performance and investment outlook.